Hi everyone, this is Aki with another video in the 15 most common tax forms, and we're going to go over right now. We went to W2, 1099 INT. We're going to go to the next one, which is 1099 DIV, which is dividends and distributions. So I have an example here, and here's my 1099 DIV form with box by box instructions, and I have that also available in the article. And if you want more detailed instruction, we're just going to go over it like general for majority of the people, because some of the stuff can be more in depth and it can be complicated, but we're just going through for general information for most taxpayers. Now there's a instruction link, info at the bottom, and there's a booklet. They have a whole PDF that basically goes over basically where you can find more information on IRS website. Now, here at the very top, we have standard information. This is the payer. This is your broker most of the time. Now, you should receive this form if you were paid more than $10 or had any withholdings, so be in box 4. And you should receive it by January 31st, but this can be delayed. Like many times, brokers actually issue them later, or they issue something first and then they issue a corrected one. Now, also, it's important to note that this look of the 1099 DIV, that's the form that's kind of created by IRS, but many brokers, they actually don't use it that exact layout. They use it their own layout, which looks kind of more kind of across information, and it's often presented differently from what you have here. However, they will also have each of these boxes corresponding to the IRS form. So you will have maybe different presentation, but you will have box 1A, B, and so on. If a box is not listed, most of the time it means it doesn't apply. Now, you also may have this form received from the brokers together with the 1099 INT and maybe even 1099 miscellaneous. So the statement may be very few pages, 10, 20 pages, and it could have all kinds of information, detail. Usually it's a summary, the first page, and then detail on the supporting pages. Now, so we have the broker information, the TIN, which is a taxpayer identification number, which is kind of like a social security for the broker, for the entity. Then we have your information, your social. Now everything here on this form, it's a dummy, so this is an example. I have Jane here with her address. Now if you have multiple account numbers, they would be listed here, and this is important because you might have multiple account numbers and you can get multiple 1099 DIV, so you want to make sure that it's not duplicate and you don't disregard something that might be for another account. Or if you married filing jointly, you might have might even have 4 of these, like if each of you has 2 different accounts with a different brokers. So it can get complicated, but the most important things are listed in these boxes. So the year of the form, we have it here for all the forms. It's kind of like that. Then, box 1, here you have the total ordinary dividends. And then in box B, we have qualified dividends. So the difference between them is that some of the dividends in box 1B are actually part of the dividends box 1A, but they're taxed differently. So the 1A ones are the total, but the portion in box B, it's actually taxed at reduced rates. So right now for 2021, the tax rates for qualified dividend and long-term capital gains would be 0, 15, and was it 20? I think it's 20%. So they're much lower rates than the maximum tax bracket rate. So this is important because you may be, let's say, in the 0% rate. So that means that these qualified dividends actually would not be taxed for you. So this is really an advantageous for many taxpayers. That's why how kind of wealthy people get away with some of the non-payment of taxes, because they have these very long-term dividends or capital gains, and if they reduce their tax in different ways, they might actually pay much lower rates. The maximum is 20%, and if they're in the highest bracket, that's much less than the 20% for the qualified dividends or long-term capital gains. So these items go on your 1040. Now 2A, that's the total capital gain distribution, and this is long-term capital gain distribution, which we just talked about. Now B, C, D, E, F, these are very specific situations, which I'm not going to go over, but you can go to IRS website now, click the link. I will put the link to that booklet where you can find out what are these items. Now, box 5. So this dividends is eligible for the 20% QBI, qualified business income deduction, which actually is pretty big, can be for taxpayers. So it's important to look for that information and make sure if you do have numbers there, put it in your tax return when you file. Then number 7, we have foreign tax paid. So this, you might also have it often on your, especially if you have mutual funds, you might be investing in some foreign companies or companies that also operate across borders and so on. And you could have it, and you could have $6, $5, $50 or more. And in box 8, it usually says which countries, and many times you will have various, because if you have mutual funds and there's like 100 or 1,000 companies there would actually be, have foreign tax paid in number of these countries. So that's why it's listed. Usually in detail, you have more information about which countries, but on the main page, you will just have it various unless it's one country listed. Now, it's important to know if you do have, up to more than 300 for single or more than 600 for married filing jointly, you might be required to file Form 1116. If it's less than that, it usually doesn't require that. So it's it just goes and on your tax return just like that, flows into your 1040. Now let's see. Now also box 11. So this would be tax exempt interest dividend. So this would also be listed on your 1040 line 2A, not taxable. So that's awesome. And then you have state information, and rarely you have state tax withheld, but it could be possible. So you do want to make sure that you put everything that you have on your 1099 div into your tax return. And that's pretty much these are the pretty much main things that you can see on a 1099 div. Again, these are the majority of cases, but not all. So if you have something unusual, make sure you talk to your specialist and make sure you put that on your tax return. So thanks for watching.